looking forward to talking about taxes. It's not everyone's funnest subject in the world, but hopefully you guys all feel a little bit more informed about potentially, going self-employed. In the future, once you finish your courses, like I said, I think there's about like 70% of like creative industries end up going self-employed, which is like a super interesting statistic, because actually in education, you don't really learn about, paying your own taxes. Most people go into employment and they're, you get your taxes deducted for you. You don't know how it works. So hopefully today it's going to be a bit of an education piece on, what is self-employment, how do we handle the taxes, how it works, and hopefully you will leave this sort of webinar just with a little bit more knowledge, just in case, you end up going self-employed after these courses, with the knowledge of what you need to do, how does the tax actually work. So we dive right in. So just about me and Tax Ninja. I set up 18 months ago. I've been employed my whole career before that at various accounting practices, but went self-employed, set up on my own, and now I run Tax Ninja. So I primarily work with small to medium businesses, sole traders, people starting out at the very beginning of their journey. So, when you sit there thinking about like doing something for yourself, those are the businesses that we look after. So we've got like a lot of experience in the self-employed market and people starting out and growing their businesses from the very beginning. So diving in, when we talk about what is self-employment, what is the concept of it, and very like stripping it right to the very start, you're going to be earning. And the way we calculate taxes for self-employment is you have your income, we have what expenses you have that relate to that income. So say you're a photographer, you go, maybe you're a wedding photographer, you go and do a job, you get paid for it. What expenses relate to it? There's lots of expenses you can claim. And we work out your profit, and then essentially when you do a tax return or you have to pay tax, we work out what tax is payable based on the profit that you've made. That's the very simple term. So income less expenses. I'll probably say this a few times, but this is essentially how we tax the self-employed. Of course, there's many caveats to it, but this is a very basic concept. When you do set up as self-employed, there's always this fundamental question: how do you do it? What should I be? Should I be a sole trader? Should I be a limited company? Now, there are two different determinations. Now, a sole trader is effectively me as an individual, me as Jamie Trowell, trading and making money, and I do a tax return at the end of it and say, basically, Jamie Trowell has made X amount of income, expenses, profit, please tax me on this. Whereas a limited company is a totally separate entity. It's the limited company. So this is where we have Tax Ninja. I'm a director of Tax Ninja and I own Tax Ninja, but it's Tax Ninja that is earning the income, incurring the expenses and the profit, and you pay a thing called corporation tax, which is company taxes. So a very different determination. One of them you have sole responsibility for, you as the individual. The other is a separate company, separate entity. Whilst you still own that, it's two different determinations. And if I forgot to say at the start, sorry, if you do have any questions, drop them in the chat. We'll talk about it at the end. We've got a bit of a Q&A time. So if you've got any questions as we go along, just feel free to drop them in. So again, we're talking sole trader limited company. As you can see here, there's many advantages, disadvantages to sole trader limited company. And I think, if you're going on this self-employed journey, it's probably the best. Champion myself as an accountant, but you want to talk to an accountant. So just make sure you're getting the right advice for you and what you're going to do. So if someone came to me and said, I want to set up a limited company, I'm only earning X, Y, Z, maybe, I'm only just starting out. Quite a lot of the time, I'd say you probably want to go down a sole trader route, because that's a very good starting point. It gives you a very basic, way of setting up your business and things like that. Whereas a limited company is quite a lot more involved. There's a lot more filing obligations. You need a lot more support from an accountant on an ongoing sort of monthly basis. So it's quite a big commitment, as it was. Whereas sole traders have this sort of one filing a year tax return, where we do the income, the expenses, and the profit, and we work out the tax on that. The only other key difference here is, if you see just on my notes there, limited companies have limited liability. So say, for example, you set up a business as a limited company, it didn't go well, you ended up with debts and things like that. It's all very, it's called limited because it's limited liability. It's all within the company. They couldn't come for your house or anything like that if that limited company got into debt, for example. Whereas as a sole trader, because you're trading as yourself, say you got into debt or arrears through your own business, there is unlimited liability. They could go for you personally, just because it is actually you as an individual that we work out the tax, and the business is running through you as an individual. So there's always a couple of considerations there, but very basic terms. If you're starting out self-employment for the very first time, you probably want to start as a sole trader, and as your business grows, and hopefully it grows into a thing where it's making quite a lot of revenue. As you can see here, we have like a very caveated estimated turnover and income of 25 to 30,000 pounds is where you'd probably think about switching to maybe a limited company if you're on this trajectory that's going up. So just a few considerations of what type of entity you could set up right at the very start there. And then we're going to talk about, so we've decided on an entity, we're going to be a sole trader. How do taxes work? And I think this is like the very chunky part of understanding taxes, and it's like the knowledge gap that fundamentally is everywhere. When I went to school all those years ago, I didn't learn about being self-employed at all. I didn't learn about taxes. You don't learn about how to get a mortgage and all these, there's so many knowledge gaps that you don't actually learn about. But hopefully today we'll bridge that gap a little bit. So when we talk about taxes, every year we do a tax return, and I'll go through the deadlines and things shortly. And I allude back to income less expenses equals profit, because it's the profit figure that we tax. So you'll have your earnings from whatever job you're doing, whatever self-employment you have. There are expenses you can claim, and again, I've got a slide on expenses. There's a number of different things you can claim, from mobile phone costs to, if it's photography, it's, your cameras and things like that, and any equipment associated with it, to give you this profit figure. And it's the profit figure that we tax. Now, as you see here, we have, every one of us in the UK has a personal allowance. That's an amount you can earn tax-free before you have to pay any taxes. So say, for example, you have income, less expenses, and we've got a profit figure of £12,570. Now that at that threshold and that earning, that profit, you wouldn't have any tax to pay because you're within that personal allowance. There's no tax payable. If you had profits over that, that's where we start to tax things. And as you can see here, we have two different types of tax. We have income tax, and then we have national insurance. Now, when you're self-employed as a sole trader, we have these two taxes that you pay. As you can see, any profits up to £50,270, you pay 20% income tax. Anything above that, it's 40%. And then we have national insurance, which you pay two types of national insurance. So there's one called Class 2, which is £3.15 a week. on profits over £11,000, and then there's class 4 national insurance, which is 9% on profits between £11,000, £909 and £50,000. Now, these are like mandatory national insurance rates, so it's all dependent on the profit that you earn as to, you know, what national insurance you pay and income tax. And it's important to obviously contribute to national insurance, because every year you are employed or have earnings, we want to qualify for our state pension. So what we do here is obviously those contributions that you do end up making contribute as a stamp, a national insurance stamp, to state pension, which, you know, is some way off for all of us, but again, it's something to consider in the future. You need to get a number of years to qualify for your state pension. And that's very basic terms of sole trader. Now, there is a lot of caveats to tax and how we tax things and expenses you can claim and things like that. And we'll talk about a few more of those today. Now, limited company, I've said there's some differences between the two. Limited company taxes and how you pay is slightly different. And we'll just talk about those. So again, we allude back to that concept. I said I was going to talk about it a few times, but limited company, whilst it is another company, so Tax Ninja, for example, Tax Ninja has its income less expenses equals profit. That company is subject to tax, which is a corporation tax. So say, for example, on my company profits, I pay 19% over to the tax man, and that's for Tax Ninja's tax, as it was. And then whatever is remaining thereafter is available for me to take out of the business. So as you see here, we call it retained profit. So it's basically profit after I've paid my corporation tax. And we usually do that in a way, two ways. So we take out a salary. So like for myself, I run myself a salary, and then I take what's called dividends. Now, it's no different to paying yourself. It's just what we call it. So whether it's a dividend, whether it's salary, and dividends are taxed slightly different in the UK. So as you can see here, a limited company can pay a shareholder, which, say, for example, myself. I can pay myself in a slightly different way as a dividend. I get a different allowance for dividends. I get a £2,000 tax-free amount. And as you can see here, whereas I was talking about income tax before, being taxed as a sole trader at 20 and 40%, you can see dividend rates are slightly lower. So 8.75% up to 50,000, and then 33.75%. So it's a slightly different concept as a limited company, but it becomes more advantageous to people as you start earning more. There's some differences here where we don't pay as much national insurance, but still get the national insurance stamp and things like that. But it really becomes a more advantageous thing as you start to earn more money, basically. So to begin with, most people start out as a sole trader and then sort of migrate over to a limited company when I talked about earlier, that sort of threshold of around 25 to 30,000 pounds. Because of these dividend rates being a little bit better than the personal tax rates. And then what we also have is obviously a similar concept where we have these expenses that we can claim through the business to help reduce the profit and therefore the tax payable, which we'll talk about a little bit more. So if we dive into the expenses, now there's a number of expenses you can claim through businesses, whether it's sole trader, limited company. They actually have similar, there's a few differences on certain things you can claim, and I won't go through them all today, but primarily we've got a basis of, you know, things we can claim here. So lots of different things. Sometimes people don't even think about these expenses, and obviously, say for example, obviously I can see we've got the photography here, so I keep using that as an example, but say you're a photographer you're going out again, wedding photography. You got your income less your expenses. Maybe it's the camera and I don't know, a few bits of equipment. Quite a lot of the time, people only just put those two, small things through, and you pay tax on your profits. So your profits will be higher because you haven't looked at all these expenses that you could potentially claim through the business to help reduce your profit and therefore reduce the tax you pay. And that's what we do as accountants. We work with clients to try and make sure that A, they're calculating their taxes correctly, but B, are you paying the right amount of tax? Because you might be overpaying tax and you don't even realize it. And I get a lot of clients come to me as sole traders saying, oh, I didn't realize I could do this, that and that as expenses, and actually it would have saved them quite a lot of money in in tax payable, because we would have reduced the profit further and therefore the tax that they pay. So it's always worth either having a chat with an accountant or just having a read up on HMRC online, because these are there's ready articles available that you can read and make sure that you're just claiming every business expense possible. Because as you can see here, if you're traveling using your private car to a job, a photo shoot, whatever it may be, you can claim like an approved mileage rate of 45p per business mile, and that's a rate that's approved by HMRC. You have to just keep a receipt for your records, but you can claim the travel to and from business sites. Training, if you are doing some sort of training course, some photography course, you can't actually claim college courses and things like that. But if you were doing, say, like I don't know what it might be, it could be like, maybe it's on software, maybe it's Adobe or editing software or something like that, and training for that, that's an expense you can put through. Equipment such as, we talk cameras and things like that, but fundamentally, if you are running a business, you're working from a laptop or you need to buy a laptop, an iPad, even office furniture, these are things that you can put through your business to help reduce the profit and therefore the tax payable. Again, we've got here mobile phone expenses. So, we all use our mobile phone. 95% of the time it can be personal, but there's also, for example, I'm a bit terrible because I have my personal and my business phone number is all the same. But you can claim a business proportion of your mobile phone bill for, if I pay £40-50 a month and I say I use my phone, 95% business use, 5% personal, I can claim 95% of my phone expenses. And these are all little things that you may not realize that you can put through as an expense, but it's all about this bigger goal of reducing the profit and therefore the tax payable. And we've got a few other things here you can see quite common, professional subscriptions, if you've got any memberships to any societies to do with your business, you can put those through. There's a thing called working from home allowance with HMRC where you can claim for working from home. So you can work out like of your bills, electric, gas and everything like that, you can apportion it to the room you use. So for example, I have this office at home here. It's solely used for working. I don't actually have anything exciting or do anything else in it but work. So I take my bills and I apportion them to the amount of rooms I have in the house and then make a sensible claim based on that. So there's quite a lot of things that you can do with expenses just to help reduce your profits and therefore the tax payable. So yeah. And then we have the concept of the tax return. So for a sole trader, I think importantly, what we talk about a tax return, we talk about the concept of the tax return is it's a submission to HMRC that covers everything you have earned that year, whether it's PAYE, whether you've been employed and getting pay slips, whether you've been self-employed, whether it's you've got a limited company, you've got some dividends, it's everything. So this is to make sure that you have the right tax figure at the end of it. And this is where, accountants come in handy, because all these things are things that we would ask to make sure that, clients are paying the right amount of tax. Now, feasibly, you can do a tax return yourself, but, you may not have all the knowledge to complete this and know every single area that you need to declare and things like that. But as you can see here, there's quite a lot of things you would need to think about, because not only we talk about what income do you have, but it's also, do you get any relief on how can we reduce the tax bill? Is there anything that you've had in the year that affects your tax bill? As you can see here, when I talk about those considerations, charity donations through gift aid, they go on a tax return. So, 95% of people don't even notice that goes on a tax return. If you're married, for example, my wife doesn't work, so I can transfer some of her personal allowance, so the £12,570 tax-free, over to myself, so I pay less tax and things like that. Again, student loans, if you've got a student loan, that might actually mean that we have to pay some more tax because it gets swept up through the tax return. So the tax return is this big document, or filing as it was, where we collate everything to do with the tax year, and make sure you pay the right tax, essentially. And some things you'll need to do is, obviously, you'll need to have to hand some of your personal information, UTR number and national insurance number, to even enable you to submit a tax return. But again, these are things that, an accountant can help with. Or there will be guidance online how to get a UTR number, because the UTR number is actually you registering with HMRC as self-employed. So if you just decide to go as a sole trader, you have to tell HMRC and let them know that you're doing that. So, and they give you this UTR number, which is it's called a unique tax reference number, but that is the number that allows us to submit a tax return. So then we move on to the tax return. I've talked about, what it is, what we file, how we file it, but the key date. So obviously, I've done a bit of a timeline here. So obviously, if you need to register as self-employed, it's quite easy to go on HMRC's website and register. We've got the link here, that obviously can be shared afterwards and things. What's important to know is the tax year itself runs from the 6th of April to the 5th of April. So currently we're in the 22-23 tax year, in which it runs from the 6th of April 22 to the 5th of April 23. And you will then pay your taxes, calculate your tax return and pay your taxes. They will be due by the 31st of January 2024. So we have this period of time where the tax year actually ends, and then you can go and submit your return, and it has to be done and paid by the 31st of January for the following year. So they give you from July to January to get the return done. And as you can see here, this is just an example of a timeline for the up and coming year. So as you can see, the tax year just passed, deadline for the last tax year 21-22. We can see here the 5th of April 2023, the tax year ends. We can now prepare a tax return and submit it to HMRC. We can see, I'm going to talk about payments on account after this. We can see the 5th of October is your deadline. So if you guys are doing any self-employed work now, you would have to register with HMRC by the latest the 5th of October 2023. So if you've done any self-employed work between the 6th of April 2022 and today's date, for example, the latest you need to register by is the 5th of October 2023. We've got the date of the 31st of October for paper tax returns, but I mean, in this digital age, I don't know anyone that does a paper tax return anymore. So that's just there for consideration. And then you'll see, as I mentioned, the 31st of January is the big the big deadline. You'll see it on the news, you'll see the articles, it will probably be on the radio and things like that. That's the key deadline. If you don't submit a tax return by then, you'll get a penalty. That's the big one for that tax year. So yeah, and then I think if you just saw just before I said about payments on account. Now these are the tax system is quite funny. So obviously we have your tax bill. Say for example, we do your income, we do all your expenses, we work out your tax and it's say £2,000. What HMRC do is make you pay towards the following tax year as well. So not only do you have this £2,000 bill, they make you pay in advance towards the following tax year. So it's quite crafty, really. It's a bit unfair. It's more for HMRC and their own cash flow, really, more than helping, us guys out. But what they do is they make you pay 50% of the following tax year towards the following tax year. So say, for example, you've got a £2,000 tax bill that's due by the 31st of January 2024. They'll say, okay, as well as that £2,000, you also need to pay us another £1,000 to pay towards the next tax year, because it's 50% of the bill. So yeah, they often come as a surprise, because if you don't have an accountant to advise you on this, you'll be working towards the tax year, working on your tax return. You might do it yourself. You might think, okay, cool, I've only got a £2,000 bill, I've got the money aside for that, and then you get this surprise that you've got £1,000 also due. So you've got a £3,000 tax bill, and then they want another payment in July, as you can see. So you end up paying over £4,000 instead of two. So I always like to just put this in here just to make people aware. And now payments on account, they do only apply if you have a tax bill more than £1,000. So say, for example, you had a tax bill of, say, I don't know, £500, you wouldn't have to make these payments towards the following year. So it's all just something to consider if you guys go self-employed, you start earning. There's quite a lot of softwares out there that will help with this, and I'll touch on those shortly. But this is just more of for your information as you start earning and seeing what your tax bill is. If it goes over £1,000, it would be likely that you have this payment in advance to make. Sometimes I get asked about registration for VAT, which is another separate tax, which VAT you charge on your services. You probably notice it everywhere you go, like if you go into the shops and you'll see VAT numbers on receipts and things like that. In essence, when you guys are starting out, you don't need to register for VAT. You only need to register if it's compulsory at £85,000. So, feasibly, like quite a lot of business do not register for VAT. So again, just added that in there because I get that question quite a lot, but you don't need to register for VAT. And then software to keep you on track. Now, obviously, I've talked a lot about taxes. There's no two ways about it. It can be quite overwhelming because it's something that you guys have probably never heard of or gone through before, if ever. But luckily, in this day and age, there's just so much software out there that can help you keep you on track. Now, with my sole traders, I provide software for them, and there's so many out there. There's a thing called Free Agent. You've probably heard of Xero, QuickBooks. I use something called Coconut, which is like a mobile app. But these apps are just really, really useful to keep you organized with your taxes and your potential bills, but also they're just really handy to run businesses. Like, for example, I have Coconut for my clients. They let you invoice through their platform, so you can literally invoice on your mobile phone, send it to your client by email. You can get paid from the invoice, even if you connect up your PayPal or something like that. They let you receipt capture, so obviously you capture your expenses all in one place. You've got your receipts electronically stored. You can take photos on the apps and things like that. So it really does build this picture of that income, expenses, profit. And not only that, the software is so advanced that it will give you an estimated tax bill. It will tell you what you need to put aside. So it's just, if you're going self-employed, I'd say it's just crucial to having a look on the market. There's, like I said, there's Free Agent, Coconut, Xero, QuickBooks. I'd actually say, like, in my personal experience, like, Xero is probably a little bit overkill for sole traders. You probably want something like Coconut or Free Agent or something like that. But what the main takeaway is, these softwares will just help you and elevate you to just feel comfortable about your taxes and where you are, because you'll have your invoices. You'll have, what's really clever with these is you can use a separate bank account and open up a business account. You can connect that bank account up and it'll pull through the business transactions for you. So if you go to, say, I don't know, wherever it might be, you might spend and buy Adobe software or something like that, through your bank account, it'll pull through into the software. It will say, we think this is software. You can take a photo of the receipt or upload the receipt, like the invoice. You've done your piece of bookkeeping there. It's updated your estimated tax bill. And you've got this figure where you know what your real-time tax bill is as you go. So throughout the year, as long as you're using these sort of softwares that are out there, you'll have in the comfort knowing, right, I need to put X amount aside. And then when the April tax year passes, I can do my tax return. I know roughly where my tax bill is. And it's not a surprise to you. I think that's the ultimate thing really here, because I've had before where clients have come to me, maybe like at the end of the year, they've kept a spreadsheet or something like that. They've not been aware of what taxes to put aside, and I'll be like, okay, cool, here we go, here's your tax return, you've got X amount to pay plus these payments on account that they weren't aware of. So then suddenly they've got a very big tax bill that they haven't really planned for. So, these softwares are on the market. They're there to help you. Some of them do come at a cost, obviously, but it's worth, I think Coconut starts off at like £5 a month, but it's just, it's something that £5 a month will just keep you so much more organized and in control of your finances, that it's probably worth that small outlay to begin with. And then again, if you're looking for an accountant, we have plans. We offer a discount on monthly subscriptions. We also do like one-off tax returns as well. So if you ever like set up as self-employed and you need an accountant, obviously we're here to help, and obviously we offer a discount for you guys at the colleges. So like I say, you don't always need an accountant to do a tax return, but if you're doing a tax return, you want the comfort that it's been looked at by a professional, then usually an accountant is you go to for that. Just making sure you're paying the right amount of tax. It's not all about, what you'll find is actually quite a lot of the time people overpaying tax because they're not claiming for things that they sort of know they can claim or anything like that. So yeah, like I say, I think that's a good overview of self-employment and just the very basics, just to give you guys a basic, because I could talk all day about taxes. There's so many rules and regulations. Like the UK has like the longest tax code in the world, I think. And quite frankly, a lot of it is very boring. And I'll be the first to say that. But I think this is the very basics that you guys would need if you were going self-employed. So hopefully you found it useful. I'll probably open the floor up now to like if anyone's got any questions, or Sarah, if you've got anything to add at all, or have you got any question.
That's great. Thank you, Jamie. It was really useful. I had a quick question. The Coconut app.
Yes.
Is that? Did you say that was for if you were a sole trader, or can it be if you're a sole trader or a limited company?
So they do offer both actually, but I like Coconut because I work there and I used to know what they're like, and I create a lot of the app, so the tax calculations I know are pretty good. And then they focus on sole traders more than limited companies. Like they are like the sole trader software.
Okay.
And it's just quite friendly to use. So when I was talking about Xero and QuickBooks and things like that, my experience with them is A, they're very good softwares, but B, they can be quite accountancy focused. So for me going to use the platform, it'd be quite nice and easy. I can sort of get my head around it. But someone doing this for the first time, they can be a bit sort of overbearing with all the reports and how to use them. Whereas Coconut, it's a mobile app, it's quite easy to apply, set up, open. You connect your bank account up and you're sort of all systems go. So it's a lot easier to just use, and it's a lot more user friendly.
Okay, brilliant. Thank you.
Cool. Did anyone else have any questions, queries? What I will do is obviously I've got my my details here as well. So if you're thinking about maybe your own personal circumstances and you want to run something by me, that's probably not appropriate to chat with everyone here. Obviously give me a call or like drop me an email, and we can sort of discuss it there if that's any help to anyone.
Brilliant. Thank you, Jamie.
That's all right, no worries.
I don't think there's no questions coming through. So.
Yeah, no worries. Like I think Sarah, you said before that obviously this is being recorded, so you know it's one of those things. If self-employment and it's not on the radar yet, you can always come back to this webinar because it will still be quite topical and relevant. Whilst the rates and taxes may change because we've got a spring budget on the way, you know, we never know what the government will do. They change tax rates all the time. The fundamentals of this stay the same. It's always going to be income less expenses equals profit, and how do we tax that? But yeah, if we haven't got any questions now, like I say, we've got my details. They're always available for you guys at the college. So
great, thank you, Jamie. We will send out the slides as well, and yeah, the video will be available later. So we'll send out information of where that will be if people want to go in and watch it.
Yeah, of course.
Thank you very much, Jamie.
That's all right, no worries. Pleasure. Thank you for having me. Hope you guys have found that useful. And yeah, I think any questions, give me a shout.